What's happening, everybody? It's your boy Creative back at it again. Go ahead, say it with me to create something great. Now, y'all gonna have to forgive my nasaliness today. I am feeling a bit under the weather, but that doesn't mean we're going to stop our work that I have planned for y'all. So what we're going to be doing, I'm super excited about. We're going to be picking up on the work where we started off late last week, I believe, being able to take algorithms, being able to make option trading algorithms from TradingView indicators, right? So we're going to jump right into it. So I'm going to use this SPY. SPY is the S&P 500. Remember, it's the top 500 companies within the New York Stock Exchange. What I want to do is just show you some of the holdings. Oh, my name is Creative, and here at Creative Coder, what we aim to do is being able to create different coding projects, whether it's algo trading, AI agents, machine learning, or any cool coding projects that I'm working on that I want you all to be able to see. And lately I've really been stuck on this algo trading. It's been advantageous and I'm getting a lot of great feedback. So if you do have any questions while we're going through this, please let me know. I've only been coding since about April of this year, but trading, I mean, that's years upon it. So I wanted to be able to find a way to marry the two, and it's been going quite well, if I may say so myself. So SPY is in ETF. An ETF is an exchange traded fund. When you think of an ETF, think of a quilt, right? Each one of the patches within the quilt represents a different company. This particular ETF has 500 different companies within SPY, right? Some of those, the top 10 companies are, oh, Netflix just got a little boost because it was Nvidia. So it's Netflix, Nvidia, Apple, Microsoft, Amazon, Broadcom, Apple. Well, this is Google, this is Facebook, this is YouTube, and this is Tesla. Okay. Berkshire Hathaway used to be in here too, but nonetheless, so you can see they're re-weighted, right? I want to say on a weekly, if not daily basis, just to be able to see, okay, we're getting the max performance from this. So again, I'm going to be using TradingView, and TradingView is a place where you can go in order to get the performance of any ETF, and that's what we're using right now. Any stock, any bond, any mutual fund, any cryptocurrency, right? Most people are going to use TradingView. I mean, there's different places you can use, but I like to use TradingView because it's clear and cut to the point. So, and again, it's SPY. Remember, it's the S&P 500, top 500 companies within the New York Stock Exchange. I'm using the 1 minute chart. So what this represents is each one of these candles represents 1 minute of battle between the buyers and the sellers, between the bulls and the bears, right? If you have a green, you see that the bulls won, the buyers won. What's happening right now, and I'm kind of dope. So you're seeing that the bulls are trying to push new support levels, resistance levels, right? Remember we talked about support and resistance? Now, resistance is new highs, right? We're trying to push new highs, right? And support is the floor. So normally, and again, I'm really trying to push through this. So if I sound nasally, y'all just forgive me. But I'm trying to push through. I got great content for y'all. So let's keep going. So support. Bears are going to push through support levels, right? Because what they want to be able to get new lows. Bulls are going to push through resistance levels. What they want to push new highs, right? So what's happening right now? Oh, look at that. The bears just took over. Whenever you see a red candle, that represents a bear candle. And what's going on right now, the bears are completely testing new support levels, and it hasn't been rejecting yet. When you know it's been rejected is when you see these wicks, right? When you see these wicks or shadows, but I don't like to call them shadows. Some people call them shadows. It is what it is, but these are wicks, right? So when you see these wicks popping out, these candles, what's happening is that you see that the support, damn, they're pushing new support levels. And it hasn't been rejected yet. Yeah, so there was a little rejection. You see this small wick right here? There was a little rejection. The bulls just took it back over, so that's what's up. So whenever you see these long wicks, resistance was rejected, right? The bulls just came back over. Now what you're looking at right now, is this a bearish engulfing or bullish engulfing? This is a bullish engulfing pattern we're looking at right now for and this is a momentum breakout. So what's going to happen is that the price just shoot right back up because the bears just tested new lows, but that was rejected. Now you have the bull. Oh no, it's turning into a twinning. All right. Before I even keep going, so what I want to do is I want to get a gap fill strategy. See the wick form that was just rejected, right? Price was just rejected. All right. So what I want to do is I want to create a gap fill strategy. So before we even jump into that, what is a gap fill strategy? Can you explain? I'm going to be using ChatGPT. In addition to ChatGPT, I'm going to be using Cursor. With inside Cursor, I'm going to be using Claude Code. All right, Gucci. Can you explain, like 12, what is a gap fill strategy and how it works? Beautiful. Imagine the stock market as a comic book. Each day, the price draws a new line, a plane, a candlestick. Sometimes the market opens the next day, the price jumps way above or below the yesterday's closing price. This creates a empty space on the chart. That empty space is called a gap. Yesterday, an example, yesterday SPY closed at 500. Today it opened at 506. There's a $6 empty space. That's a gap between yesterday's close and today's open. SPY closed at 500. It opened at 494. We have a gap just downward. So what does a gap fill mean? Gap fills means is that the price often moves back to the fill in space, that empty space, right? Like the market correcting itself. It's like a patching a hole in a video game map. So if SPY opens up higher than yesterday, gap fill would be the price dropping back down to yesterday's close. If SPY opened lower, a gap fill would be rising it back to yesterday's close. So what happens? Traders see the gap and think, okay, price moved too fast, it might return. Algorithms love easy targets. Many bots are programmed to trade gap fills, right? Humans react to overnight news, then calm once the market opens, so the price snap backs like a rubber band. So how a gap fill strategy works in simple steps. All right, SPY opens high above yesterday's close. If we expect that the price might fall down to fill the gap, you trade puts towards the gap level. If SPY open low, if SPY opens low below, that's funny, low below yesterday's close, you might, we expect the price to move up to fill it. So we trade calls towards that gap fill level. Super simple example. Yesterday, SPY closed at 500. Today, it opened at 506. So we have a gap up. You expect SPY might fall back down to 500 and fill the gap. So what we're doing, if the price stops dropping at 932, the momentum is weak. We buy a put and we ride it towards the 500. Once the S&P hits 500, the gap fill is complete. We take the profit and we exit. All right. Now, I noticed something. What is the difference between a gap fill and mean reversion? Mean reversion is basically what they explained here. Also, I was like, wait, isn't this just mean reversion? So think of the stock market like a rubber band and jump cut in a video, two different things. Gap fill equals fixing a jump cut. So we talked about the gap fill, so I'm not going to go over that again, right? Mean reversion is a rubber band snapping back. Mean reversion is that the price moved way too far from its average. The average is usually something like the VWAP, SMA, VWAP, volume weighted average price, simple moving average, or exponential moving average. VWAP, SMA, and EMA. Gucci. The price gets stretched, then snapbacks towards its average. It's about the price going too far from the normal and then returning back to the fair value. Example, the SPY VWAP is 500. The price shoots up to 508. Traders think, whoa, the price is stretched way too far from its fair value. It might come back down. Mean reversion equals expecting the 508 to drop back down to 500. And it can happen any time of day, not just at open. So what's the real difference? Gap fill, what they go back to. Gap fill equals the yesterday's close. Mean reversion is the average. Got you. Is the average. So it's VWAP, SMA, EMA. That makes sense. When gap fill only after the market opens. Mean reversion anytime during the day. Why? Gap fill overnight price movement was extreme. Mean reversion price moved too far from the fair value. What it looks like a gap fill is a literal hole, fam. Can we see a gap fill? Can we see a gap fill? Let me see if I can find a gap fill. I'm not going to go. Oh, okay. There's a gap. Beautiful. So I said it's gap down like a mug. Y'all see this? All right. So right here, a literal gap, fam. So right here, I don't even know if this is open. But nonetheless, let's just pretend like this was the open for SPY, right? So SPY opened at 671, and then it gapped all the way down to 699, right? So this is a gap down. So what we would do is we will buy a call. The reason we will buy a call is because we're bearish on the market. It's going to be bullish on the market. We think that the market is going to go up, right? So if we buy that call, we would have been printing money, right? So we have a literal gap right here. So this is what a gap fill is. A gap fill is saying that, okay, the market just gapped down. I'm expecting the market to be able to fill that gap. So I want to create a strategy that enables us to be able to do so. Sounds good? Perfect. Let me go back to live pricing so we can see what SPY is doing right now. Broham. All right. The bears are taking over, fam. The bears are taking over. All right. So we got the gap fill. Perfect. So what I want to do is we're going to take this is TradingView, right? So what we're going to do is we're going to click on indicators. Indicators is on the top part of this toolbar here, right? So you'll see SPY, you'll see the plus sign, so you can add a symbol. You'll see the time frame. We're using 1 minute. You'll see the candles. You can change the candles to different things, but I'm going to just keep it candles because that's how I learned, right? Oh, we should put the candles and the volume, but nonetheless, I'm going to come back. So you see I'm going to click indicators, right? And then now I'm going to click gap. Right, and now we're going to search the different indicators that the community has already made, and then we're going to tweak it and make it our own. We're going to add our own edge to it. I saw one that was okay. This fair value gap by Algo. Algo always creates dope ass algorithms, and what we can do is take it and make it our own. So I want to take Algo. So you see these brackets here. It's going to say source code. I'm going to click on it. Then I'm going to copy this algo. Then what we're going to do is go ahead and come over to cursor. We're going to open up a new folder. Gap fill, baby. And remember, this is going to be, oh, snap, crackle, and pop. Y'all know what I forgot to do? Give me 1 second. Give me 1 second. I know I'm supposed to do this. I just forgot, kid. I'm not going to hold you. I'm not going to hold you. Here you go. So you can see. Hold on. So you can see. All right. Again, I told y'all we're going to be using Claude Code, but we use 4.5. So what I'm going to do is go ahead and grab the command for 4.5. Close that one out. Grab Claude Sonnet 4.5. Beautiful. Now, before I start any session, as y'all know, I like to be able to build context. So what I'm going to do is say, what do you know about trading indicators from TradingView? So we're building context, and once we have that context, then we can continue on what we're doing here. All right, beautiful. Built-in indicators, popular ones include RSI, MACD, Bollinger Bands, Moving Average, SMA, EMA, Scholastic, ATR, Average True Range, volume indicators, access to the indicator menu in the, all right, beautiful pine script. All right. Review the following gap fill indicator that we pulled from. Wait, you should be able to see this. Can you not? Okay, perfect. I just wanted to make sure that we pulled from TradingView. Explain like I'm 12. All right, let's keep going. Explain like I'm 12 so we can really understand what is going on. All right, so you saw how we went and grabbed that gap fill strategy. The only thing that we're going to have to do is adjust this a little bit so it can work for 0 DTE strategies. But nonetheless, what we're going to do, fam, while that's outputting, y'all just give me 2 shakes of a second. I really do appreciate y'all's patience. You feel me? 2 shakes of a second. We're almost. Oh, there we go. There it is. All right. The Pine Script indicator finds and displays the fair value gap, the FVG, on a chart. Let me break it down in simple terms. What is the fair value gap? Imagine a price chart like a ladder. Sometimes the price jumps so far that it skips a rung, leaving a gap between where it was and where it went. The empty space is the fair gap value. What the code does, it detects a bullish gap. Price just jumped up. Today's lowest is above the highest price from the last 2 bars ago. This is literally a empty space between them. That's a gap. A bearish gap, same thing, but bear today's highest price is below the lowest price from the 2 bars ago. Again, an empty gap. What happens after a gap is found? The code draws a colored triangle. Excuse me, a color. I said triangle, bruh. My whatever. A colored rectangle, bruh. Boxes on the chart showing where the gaps are. Green boxes equals bullish gaps. Red boxes equals bearish gaps. Mitigation, where gaps get filled. Think of gaps like a hole in the road. Prices often come back to fill these holes. A bullish gap gets filled when the price drops back down into that gap zone. A bearish gap gets filled when the price rises back into the gap zone. When this happens, the box is removed and optionally a dashed line is drawn. Key features is the threshold, only gaps bigger than X, filter out any tiny gaps. Auto mode automatically calculates what gap size matters for the asset. Dynamic mode, gap up and update as price changes. Dashboard shows the statistics, how many gaps found and how many gaps were filled. Data tracking, the code uses arrays like filling cabinet, excuse me. The code uses arrays like filing cabinets. FVG underscore record stores the info about the gap, top, bottom, time, bearish, and bull. And then the FVG underscore area stores the visual boxes on the chart. Every bar is checked, and if any old gap got filled and removed from them both, remove them from both lists. Does this clarify what's happening? Yes. All right. So what we want to do is build out an algo option strategy using our 4 DTE SPY options using these principles. Using these this info presented here. Let's break it down so we are able to talk about how we enter before we break down the other parts of the strategy. Beautiful, fam. Beautiful. Able to talk about how. All right, so we're going to wait for the output, and as soon as we get the output, we're going to continue our work. Perfect. Let's focus on the entry rules for 0 DTE SPY options using the fair value gaps. The key entry concept to consider before we design the entry strategy. Let's think about these questions. Gap fill, option to yep, by calls, expecting a bounce up from the gap. Bearish FVG detected by puts, expecting a gap down from the gap. Or do we trade the fill waiting for the price to come back into the gap? No, I like this better. So what I'm going to do, and I'm coming here so we can start to build out entry for gap strat. Let me just make sure y'all seeing what I'm doing. All right, perfect. So here's our entry for our gap strat. So perfect. Yes. Entry. Beautiful. Entry time. Oh, crap. Oh, crapola. There we go. Entry time. Enter immediate when FVG is detected. Wait for the price to approach the gap zone. Wait for the price. So We are thinking to enter once detected based on backtest. Now remember what a backtest is, right? A backtest is being able to take our strategy, throw it in a time machine, and seeing how well it performs in 2024, 2023, 2022, right? So on and so forth. Because what a backtest is aiming to do is being able to see how well the strategy performs on historical data. And there's this notion that lets us know if it does well in the past and there's a high likelihood that it'll do well in the future. There's no promise, right? There is no guarantees for this trading thing. If anybody's guaranteeing you anything, take your money and clear it, kid, because what we're doing is that, again, wait, I forgot to say this. This is not financial advice. This is merely educational advice. If you do seek financial advice, please make sure you talk to a financial advisor, certified financial planner, or those that are licensed to be able to assist you with that. Beautiful. Based on backtest results, we can adjust accordingly. All right, 3, gap quality. Only trade when the gap above a certain size threshold. Only trade during a specific time. Okay. We don't. I'm not even gonna hold you. We don't know where to start with this one. Please see below for more info on strat. So this can assist with building this out. For market context, only trade when the overall trend direction, need volume confirmation, time of day restriction. Um, see below will provide more context. Wait for unmitigated gap to exist. Enter when the price starts moving back towards the gap. Expect. Okay, I don't like any of those. So what I'm going to do, homie, is come back here. And then what we're going to say is only one trade per day. Session is between 9:30 a.m. and 11 a.m. Starting capital $100. All of our strategies start at $100, right? Unless told otherwise, because we want to be able to dispel the notion that you need thousands upon dollars to be able to trade options. No, right? So all of our strategies start at $100 unless told otherwise. Position sizing. Hold on. All right, position sizing. If balance is less than 499, can use up to 88% of portfolio balance. If balance is between 500 and 1K, can use up to 44% of portfolio balance. And if balance is greater than 1K, can use up to, let's just call it 19% of portfolio balance. Stop loss is letting us know that we're starting with $100. If the position size gets down to, what is that, $78, right? Or 72, because I want to think of a stop loss of like 18.44%. So what it's saying is that if the position gets down to like 73.46, $73, get us out the position, right? So that's our stop loss. Okay. So this is good. This is good. This is a good place to start. And then Jit could be able to assist us really breaking this down. Review, and let's discuss with this context. And if y'all do have any questions, just please let me know. Again, I'm a little bit nasally, right? Oh, strike. I love that. Great. Now we're getting somewhere. Let me organize this so we know more about our gap fill 0 DTE option strategy. Bullish signal, okay. We're buying calls. Bearish as fair value gap detected. We're buying puts. Enter immediately upon detection. Trading windows between 9:30 and 11:11. Only one trade per day. Balance, okay. Gap quality. Should we only trade the first FVG detected each morning, or only trade the FVGs above a certain threshold? Okay, good question. Let's trade the first FVG detected, but also make sure it meets the threshold of, I don't know, 0.12%. Want to start off aggressive, then we can adjust as we go through backtest. All right. Your message got grandpa. That says stop loss of 8.44 review. Oh, did you mean yes? Yes. Stop loss is 18.44%. Oh, TP prop. Ah, shit. I forgot about take profit. Shit. My fault, y'all. I forgot about take profit. So let me do that real quick with y'all. Let's do that real quick. I'm like, damn, I knew I forgot something. TP1, take profit. When I say TP is take profit, right? So TP1 is going to be 44.5, 44.3, 44.4%. TP2 is 33.5%. TP3 is 22.4, no, 22.8%. And then TP4, 14.8%. Max hold time is, let me see. Let me start at 550 minutes. Exit full position, no scaling out. Exit full position when either of these conditions are met. Of course, we are wanting the higher TP, but whichever one hits first, exit. All right, beautiful. All right, perfect. So I can take these. Let's come back over here. Review, and let's discuss. All right, man. I really hope that y'all are digging this. We are building out this strategy line by line, right? And all an algorithm is such a rule of instructions that you train and allow it to be able to. All right, perfect. Now I understand the strategy. Let me confirm the complete picture. 0 DTE gap fill strategy complete rules. First, we're going to detect the fair value gaps. When I say FVG, that's fair value gap detected between 9:30 and 11:11 a.m. Must be greater than the 0.12 threshold. Bullish, we're buying calls. Bearish, we're buying puts. Only one trade per day. Position sizing, take profit. Question. Oh, strike selection. Shit, I forgot that. Multiple TPs. You said whichever one hit first, but wouldn't TP1 always need to hit before TP? Bruh, don't make this deeper than it is. Two, we are wanting either OTM or slightly ITM to start with, out the money or in the money. OTM, when I say OTM is out the money, ITM is in the money. Delta min 0.12, so max 0.44. More on this C reference back test. We want to use multiple. That's one. Sometimes you gotta argue with the fucking computer, bruh. We want to use multiple. Don't argue with me. Yes. Yes. Exit when max hold time hits. Theta decay can be ruthless for 0 DTE options. All right, let me bring in this reference backtest review, reference backtest as well. What I want to do, Jit is tripping. All right, let me come over here. This is another one of our bots that I created here with y'all. This is our second chance bot. Let me go ahead and get a reference backtest for you all real quick. You know who I do. Range is hold on. Your QQQ. What about, where is it? Hold on. I'm looking for, I mean anyone could work. I ain't gonna hold you. This EMA one. Okay. Let me see you. Are you spy or you QQQ? You're QQQ. I want to find one that's spy. Are you spy or you QQQ? You're spy. Beautiful. Let me grab you. All right, I got my reference backtest. Reference backtest. I forgot to delete that. Not gonna hold you. Now let's discuss. Now let's discuss, homie. Now let's discuss. Give me a second. You should have everything you need now. It shouldn't be an issue though, fam. Got it. Now I understand the reference backtest. Let me map out your gap fill strategy against the 3-bar breakout strategy. 3-bar confirmation. Exit is the key difference. You want 4 TPs. Yeah, now I understand. You want the bot to check all 4 and exit whichever one hits first. Could be 4 before hitting 1, but if the price drop immediately, okay, then recover. Stop loss, max hold time, position sizing. Bruh, stop arguing with me. You want to check if price is greater than TP. Yes. Use the same. I'm fine with that. Okay. Yes, that works. 2, yes, that is fine. 3, yes, that works. Also, make sure we have min premium of 0. I don't know, 10 and max premium of 0.88. Are we now ready to build out the back test? We're almost there. We're almost there. We just got to flush out these last little kinks. And once we get these kinks about the way, then we're going to be ready to go, fam. I know y'all excited because I'm jumping up and down too. 0.88. Are we now? All right, let's go. Perfect. Let me confirm the complete strategy build. Entry. We talked about that. Strike selection. Okay. Strike distance. Scoring. Exit. Ready to build. Should we create the back test using? Yes. Yes. Yes, bro. Yes. Use it how we are using it in the reference backtest. That is why we showed you it to same street. Yes, bruh. 3. What date range? We are using, yeah, same one. We are using the same one, bruh. Call this back test gap for me. Gap for me. Gap for me, baby. bt.py. And we're going to start with 2024. 2024. All right, so I'm gonna let this back test build out real quick. I'm gonna go grab some Yo quiero agua, ya zilmi. And I'll be right back before this one is completed. All right, give me a second. What are you doing? All right, what are you doing? Why are you searching for the configs? We gave you the reference backtest to use. Here it is again. Because I was like, bro, why are you searching for the config file? You have no reason. You're right. My bad. I have a reference file backtest already. I'll start building gap for me, babe. All right, bro. Stop tripping, bro. All right, y'all. I'm going to be right back. I'm going to grab some agua and we're going to continue. By the time I get back, we should be ready to run our backtest. Matter of fact, let me just set the stage. Let me set the stage. Make sure it is ready. I want to get our Conda environment. Remember what a Conda environment is. It's like a garage for all the libraries that you're going to need for that particular Python project. All right, perfect. Our Conda environment is ready. All right, we're ready to run the back test. So just give me a moment, and as soon as this is done, we'll be ready to go. Gatfield baby is ready to go. All right, let's go ahead and run it. Oh, no trades executed. Mock implementation, need historical data. Bro, what are you doing? This guy, bro. Did I bring you the bot? I brought you the bot. I didn't bring. Freak. Why didn't you say something? My fault, man. Freaking A, Jit. My fault, kid. you could have said something like you could have said. Matter of fact, I should have looked at it because I brought the bot, not the back test. My fault. Gave you the wrong file. Here it is. Let's fix now. All right. Now, while that's getting fixed, I need to create a couple of other strategies. Gap for me back test journal. So we can have that. .md is like a Word file for when you're working within Python or working within a code editor. Let me say that because it's just not Python. I've seen this in like Java and other type of coding language. So .md is just the Word file that allows us to be able just to like actually type words here. So it doesn't have to be code. We're also going to make our trading journal. .md. And I need our backtest results. Make a folder called backtest results. And within those folders, create subfolders called 2022, 2023, 2024. And within those, create subfolders called V1 backtest baseline. Beautiful. So we're going to get that up and running. That's crazy. That all right, beautiful. Let me just make sure. V1 backtest baseline. Perfect. I love you that you listen to me. My fault, man. I should have known better. I should have known better, fam. I should have known better. You should be almost done. You should be almost done. And if y'all do not have any questions while we're working through this, please let me know. Again, this is just my process. And when it comes to building out algo codes, all right, here we go. Talk to me nice. Talk to me nice. Talk to me nice. Here we go. Let me go ahead and get our strategy parms real quick. Go put it in our whiteboard. Let me go ahead and say, I got our parms. Perfect. While that's loading, the backtest is loading. I want to say backtest baseline 2024 new high. All right, so we can get everything ready. Push you out over here too. Perfect. So now we're Gucci. Let's come back over here. Oh, backtest is running. Shit, I folded. All right. Oh, I maybe need to make this a little bit more aggressive, fam. I don't know. All these days without no entry. I mean, that's fine. I don't want to force positions either. You see me? Do not want to force positions either. So I'm okay with that. But it's just a matter of. All right. So we're at 185 right now. Let me just look at this position. This was a call. We bought a strike price of 522 with a delta of 12. We bought it at $16. And then we got out in, 2 minutes. We made $58. It's not bad. Okay, another one. Call 504.39, almost double the delta, triple almost. Bought it at 85. Oh, we lost. Stop loss. Did we get another? Yep. Put 496, 36 apiece. We bought 4 contracts. Stop loss. Oh, put 551. We bought 58 apiece. Stop loss. Let me just go to where we are right now because I can just get lost with that. Where are we? 219. So what I'm noticing is one of two things. We're not finding a gap, right? Every time. So that's fine, right? I'd rather be over selective than just lose your ass, number one. And number two, I'm noticing that it's giving back too much money. So there's just a few things that we need to adjust with this. But I mean, this is not bad to start, right? I mean, I don't know. How many trades? 23 trades, $132. Return 32%. Sharp ratio is horrible. Max drawdown is even bad. That's the lowest. The lowest that they got down to was like $49 and was able to rally to 132. Profit factor for every $1 we lost, we're making $1.08. That is fucking horrible. 56% win rate, just above a coin flip. I mean, there's a couple things we need to do here to be able to make this a bit more aggressive, fam. A bit more. So let me bring in our results. All right. Review and let's discuss. Use grep and awk. Now, grep and awk are just different Python terminal search commands that the AI Claude Code could use to be able to make to be able to make reading the file a lot easier. Use grep and awk terminal commands to review, then advise findings before we adjust. So what we said, 136, 132, 132.76. 132.76. 132.76. So that's a couple things. Don't worry. This is just a start. You see me? Like, I'd rather us to being able to start. Oh, crap. I gotta remember that every time I hit these arrows, it's going to take y'all to a different screen. Don't remember. Don't worry. I remember that this time. It's going through all the data, saying, okay, what worked, what didn't work, what can we adjust, shit like that. Okay, it's looking at all the TP1 hits, all the TP2 hits, TP3. I mean, the basis of it, I like it, right? I just need to make this a bit more jiggy. A little bit more aggressive, right? And the max drawdown is not killing from it. So we can actually see like a reputable return, not just $32. Oh, crap. Oh, you shouldn't be there. Sorry. I told you I just got a little bit of allergies that I'm dealing with. I don't even want to call it an allergy. I was full on, like, I couldn't get up this weekend because I wanted to do this on Saturday, but I did not have the strength, fam. All right, backtest analysis 2024, 23 trades, 56% win rate, 32% return, 49% drawdown. Peak equity was 261, 161% gain. Then we gave back 50%. Critical issues, directional bias, all puts, 22 put trades, 1 call trade. Your SVG detection is heavily biased towards bearish gaps. Call trade 1 was 56% profitable. This suggests that bearish SVG gaps are more common or detection logic issue. Stop loss is eating us. 10 stop loss is we lost $397. 12 TP hits. Yeah, risk reward. Losers are bigger than the winners. Low delta struggle. 18 trades with a delta less than 20. 78% of the trades. Low delta is 10 winners, 8 losers. Mid delta between. Okay, medium delta performs better but rarely selected. Facts exits. I love this. Adjustment. Review the detection logic. Why only puts. Check if the okay. Let's check the detection logic. Let's check the detection logic and make sure it is sound and no issues with it before we proceed. And while I'm going to do that, I'm going to go grab another gap fill just to be able to go get us ready. Remember, all I did, let me just bring this down. This is TradingView. And with inside TradingView, let me just make sure you can see what I'm looking at and I'm not just talking to myself. All right, perfect. All right, with inside TradingView, what we're going to do is click on indicators, and then I'm going to hit gap, and then dynamic gap probability to fair value gap. Let's just whichever one peaks the eye. Fair value gap and gap profile. Fair value gap. Let's see. Can y'all see this? Join. Oh shit! I didn't need you to do that. You just listen to me. Can y'all see that? I think y'all can. All right. Volumatic gap, inversion gap, volumatic ICT fair value gap. Okay. Good. Okay, let me. So right now, Cloud Code is checking to be able to see. Oh, maybe this one. All right. So I'm gonna grab this one just as a backup, fam. Gap percentage. Okay. Then I'll use that one just in case this one is trippy. And this one doesn't work. So we have a backup already. Already have a backup and is ready to go, fam. Perfect. One. Just as a backup, fam. Gap percentage. Okay. Then I'll use that one. All right, perfect. Now I'm just waiting for this output. And as soon as we get the output, I'll be able to continue test SVG full year gap detection. So what it's doing right now, it's running some QA to be able to make sure that the logic for the gap fill, there isn't a problem with it and it actually works. So that's what we're seeing. It's running these two tests right now to be able to gauge the results or the efficacy of it. Oh shit, VIX is at 22, fam. While that's doing that, let's talk a little bit about VIX. Oh, look at that. I was just about to bring up VIX. VIX is the probability, VIX is the volatility index, right? It allows us to be, oh, wait, key finding. The SVG is fine, but your backtest results show. Wait, fucker, what are you doing? Huge finding. The fair value gap detection logic is fine. We found 150 bullish gaps, 87 bearish gap, but your backtest results show 22 and 1. The problem is not the detection logic. Let me check the strike selection logic. I bet it's failing to find a valid call option. Damn, it just gapped up. Look at that. All right, while this is working, let me go talk about shit. Aha. The issue is the call filtering. Let me check the call filter. I was wrong. The CSV shows 10 calls, 13. No shit. My earlier graph was wrong. The bias is much smaller than I thought. There's a 13 to 10 ratio. Given the detection finds 150 bullish and 87 bearish fair value gaps, but only 10 calls and 13 puts. 13 push. This means the 150 bearish signals 10 call. Okay. The issue is not the issue is the call option filtering. Let me check the call option rejection. The S of I'm calling keep calling to say S, but it's F. Again, I'm just whatever. FVG detection logic is sound. Okay, the actual trades. Why are the calls getting filtered out twice as more than the puts? Likely culprit is the strike range is too tight. Premium range calls may be more expensive. Bid-ask spread calls may have wider spreads. Delta range may be hitting edge cases. SVG, no changes. We need to widen. Okay. No. All right. Can you, okay, just to make sure we're on the same page. explain this like I'm 12 so we can ensure we are on the same page before adjusting it. I have a fucking gap right here that all right, hold on. Let me just explain this real quick to y'all. And then I'll get back to TradingView. Ah, the gap just went up. All right, damn. All right, so VIX is the my fault. Leave. Y'all see this gap? There's a couple of gaps that just happened. So VIX is a volatility index that allows us to be able to see how volatile the market is. So right now, when VIX hovering at 22 is letting us know that the market is a little bit elevated right now, and it's expecting a big move to happen. Normally, VIX is around like 15, 10, 16, right? But the fact it's in like the mid 20, the low 20s right now, 22, is letting us know that the market is expecting a big move to happen. So let me go back to our work here, bruh. What are you doing? All right. Imagine SPY is trading at $500 right now. A strike is the price you're betting on. The current settings is the strike between 500, okay, and 510, 2%. The puts is 490, less than 2%, 499. Okay. This is super narrow range, only 9 to 10 strikes to pick from. If none of them have a cheap enough options that meet your rules, delta, premium, etc., then no trade. The new settings is we can't do half, so that's not going to fly. Excuse me. Now you have 30 strikes to choose from instead of 10. More options, better chance of finding one that fits your rules. Why call trades benefit more? When SPY gaps up, the bullish of fair value gap, the price moves fast. Having more strike choices means you can find a call option that has the right delta, costs the right amount, and has tight spreads. Increasing the premium. What this means, this is the price you pay for the option contract. The current max is no, I'm not increasing that. Calls usually, okay, this is I'm not increasing, so that's staying at $88. The spread, what this means, bid is what someone will pay you for the option. Ax is what someone will charge you for the option. Spread equals the ax subtract the bid, the gap between them. Now, example, someone pays you for the option, someone charges us for the option, spread is 0.5. The current rule, spread must be less than 0.50. Wait, that's huge. A spread of 0.50 is super wide, means that the option is illiquid, hard to trade. Your filter is already very lenient. Decision, no shit. Your robot is too picky and rejects 93% of the call signals. Looking at more strikes. All right. So we are willing to allow more strikes, but it has to be whole numbers, not half dollars. What I mean, JIT right here is recommending this half dollar is going to break IBKR. IBKR only hold numbers, right? So I'm doing this for future once we're ready to make the bot. And we want to keep the premium max where it is. Now let's review the updates that are needed for the strike. For the strike selection. So we are able to get more activity. Logic is found. Oh, you're like big tripping right now. I don't need you there. Can you just remove yourself? Thank you. Thank you. Good. The good filters already okay based on the percentage. The option data already has hold order strikes. Final recommendation is the current. More strikes to choose from. Keep as it is. All right. So what I'm thinking, let's just make it a little bit more wider. Let me go to 5%. All right. Instead of 3%, let's try 5%, and then let's keep everything else the same. Let's check the results on that, homie. All right, beautiful. So what I want to do, let's go get organized real quick before we file that away. Move to 2024 baseline. All right. Update with what we learned from V1 baseline test. You're awesome. Now let's run our version 2. You're awesome. Thank you. Thank you. All right. We kept everything else the same. The only thing that we did was make it such that we have more options when we're selecting the strike. We're waiting for it to load. Again, it's going to take maybe like another minute or so for it to load. You try to do something 10 million times and tell me how long that takes you. You try to do something 97,000 times and tell me how long that takes you. Oh, here we go. Here we go. I think we still have the it not being aggressive enough, fam. I think we still have that problem, fam. I'm not gonna hold you. I mean, because once we find it, but huh, we just had 2 losses in a row. But like we're trading every other month though, fam. Every other month right now, fam. Just had 3 losses in a row. Again, that's our first trade in like, okay. Let's see if we can get more activity for the last 3 months. Let's check the activity we're going to get for the last 3 months. I think it was 132 was the previous results. It's at 128 right now. Okay. We have about 20 days, 15 days, 12 days left. Let's see what it's screaming. The words are catatonic, man. Review. Review and let's discuss, fam. Yeah, these results ain't. Version 2 is 127. Yeah, 127.18. Let me just go ahead and make note of that. V2, new high. Here we go. Damn, it's about to compact. I didn't even get that much out of you, bro, when you about to compact. I mean, I zeal you. You zeal me. Same 23 trades, but shit got worse. Worst performance. Key insight. The wider strike didn't increase the trade count, but it did work for the trade quality. Looking at the deltas, V2 average delta was much higher than V1's. V2 had 13 trades between 20 and 30 delta range versus only 4 in V1, only 6 trades less than with the delta less than 0.20 versus 18. This is actually good. Higher delta equals better quality being selected. Why was V2 worse? The puts trades are getting destroyed. Right, call trades are solid. Recommendation V5 is right. The puts are the problem. Filter out. No. All right, fam. We are noticing that we are only getting 23 trades in the year. How can we make it such that we get more activity? Review and advise before updating code. I ain't want to cough in your ear. I felt it coming on. I felt it coming on. Great question. Now let me analyze why we're only getting 27 trades. 23. I wish it was 27. Biggest impact. Extend the entry window. No. I'm not extending the entry window. Let me check what's actually being rejected. May I not? Da-dum, 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 da-dum. Almost there. Come on. We're waiting for this output. The real problem is 9.2% of the days, the current trading days, only 23 trades executed, trading once every 11 days. Why so few? 337 fair value signals detected, but only 23 was trade, 90% rejection rate. I'm not extending it. I'm not increasing the premium. Bid ask tolerance. Widen. Okay, this is what I want to do. This is what I'm going to do. I will widen. No, I will increase the bid ask tolerance to 0.77. Widen the delta range min to 0.08 and max to 0.60. And then lower the SVG threshold percentage to 0.0008. Let's do 0.3 right now. 0.3%. Keep everything else the same. Precipitating. Doesn't that mean raining? Oh crap. Okay, I was about to say. make a new folder called V2. What did I do here? What did I do? Oh, I just did strike prices and move here. You're awesome sauce. Oh, I still need you to move it, friend. Well, can I? Update with what we learned so far from V2. So we can keep up with that. Now we have version 3 running. Well, look at that. Got a lot more activity, but can it survive now though, bro? Um, what I think, too many changes at one time. um, hold on. Too many changes at one time. What I'm gonna do, we're going to push the bid axe tolerance back to what it was, the point five, and then keep everything else. That's fine. Yeah. So push the. Oh crap! Now it's compacting. Well, that's fine. While it's compacting, give me a second. All right, perfect. So we ran it, but stopped it halfway through. We are thinking that we need to go back to the baseline bid axe tolerance and SVG threshold percentage. Go to 0.058 instead of where it is now. Should be better balance. Yeah, should be a better balance. Before I can see the issue, the account was bleeding out. Yeah, bro. With too many stop losses, insufficient front warning, the loosened filters created too many low quality signals. Let me adjust the baseline and increase it. All right. Gucci them. Now we're going to say clear. We're going to say Python gap for, what is it? Gap for me, baby, bt.py. There we go. This should be a lot better. Let's see. I don't know. I don't have a magic ball I can look at and be like, okay, here you go, fam. No, we have to do the work. And this is part of the process. I'm not going to hold you. This. All right, here we go. The biggest. I don't know. Let's see what you do. Y'all saw that. 334.92. Did we just find a Goldilocks zone? Goldilocks zone. Not too hot, not too cold. Just right. Goldilocks zone. Did we just find a Goldilocks zone? I don't know. I think I can make it a little bit more aggressive. Fam. So that's it just crossed $1,000. Oh, we giving back too much money. 1,100. I think I can make it a little bit more aggressive. Number one, I think I can make the okay. I think I can make it a little bit. I think we have more room than I thought previously because this strategy works. It's just a matter of being able to get it such that like you're getting that a good quality of activity, right? But you're also getting the returns that is going to speak volume. So we may have, I'm not going to say this is a Goldilocks zone yet, but this is damn near close to it. We're on the same street. It's on the same street, right? We just probably at a different house. Win rate improved. Profit factor still needs to get a little bit better, right? I'm looking for a profit factor of like 3, 4, 5, right? I mean, the return. All right, let's go look. The trades damn near tripled. The returns damn near quadrupled, almost 10x. Review and let's discuss. So what was it? 1,084. No, $1,284.87. So that's what we are at right now. Okay. Stop spazzing on me though. V3 baseline results. New high. 1284.67. Damn, bruh. Like you don't gotta spaz this hard. All right, there you go. You're almost done. Yeah, almost done. Again, I appreciate y'all for joining us today. What we're doing is that, okay. I need a massive improvement, 10x the returns, the trade count, 170% more activity, final balance through the roof, returns great, and run route improved, max drawdown is super sexy, your profit factor is damn near twice as much, call put performance 23-29, calls are twice as more profitable than puts, average TP, take winner, average stop loss, finally achieve the positive risk reward ratio as the winners are more than the graders. Exit distribution, much lower. Trade frequency, 62 out of 252 days. We're almost 25% more active. Um, all right. All right. Let's work to this Goldilocks zone. Let's drop the FVG threshold to 0.055% and bid ask okay, whatever, bro. Bid ask to 0.5058 and keep everything else the same. I think these are good. So I'm dropping the threshold a little bit for the fair value. Then I'm increasing the threshold for bid ask. All right. V3, delta, F, FVG, and then strike. Let's move and create V3 folder for 2024. What do I need? What do I need? What do I need? I need you to update our backtest journal. That's what I need you to do. Update with what we have learned so far. All right. We made it a bit more sensitive, fam. A bit more sensitive. So let's see where it takes us. I'm interested. What I'm noticing right now is giving back too much of the profits. We're giving back way too much of the profits right now, fam. What I think, my fault, bruh. Every time when I want to go live, bruh, people want to. That's when everybody want to talk to you. That's when everybody want to be like, "Hey, man, creative, what you doing, bruh?" I'm really trying not to have these sniffles in y'all ear, man. But like again, I'm trying to push through. We're almost there. Give me like another cool 45 minutes or whatever, and we'll be Gucci. Oh, we just crossed it. Now, hold the fucking line, man. Y'all see, it's like we're giving back way too much money. Hold the line. Hmm. 3.2, 3.2, 3.2, 3.2, 3.2. For me in my house, is giving back too much money. We're giving back too much money. I'm not gonna hold you. I mean, yeah, these later months are gonna save us, and that's what's gonna take. Let me see. Okay, profit factor dropped. Win rate dropped. So this was a little bit of a fail. Yeah, we got more trades, but homie, I'm not gonna hold you. I don't think this is it. I think where was that before? review, and let's discuss. What was that before? It's probably going to slide a little bit better. I just probably need to update a few more other things. This is V4. V4 baseline results. New high. $80 worse. Stop spazzing on me. There we go. There we go. It low key was spazzing a little bit. I'm not going to hold y'all. It was spazzing a bit, fam. Yeah, I agree. Win rate drop. Returns drop. Yeah, so I'm going to reject this one. So what did I do? We did what? So I'm gonna go back. Okay, let me keep the fair value threshold where it's at, and then I'm going to bring the bid ask spread where it was. So let me see if that improves it. All right, let's try this. Keep the fair value percentage where it is at, and then bring the bid ask spread back to baseline. This is part of the process. I'm not going to hold you, man. I mean, yeah, I can kind of ship this right now, but I think we can get a little bit more out of this. I didn't even have to touch the take profit yet, which is kind of trippy. Yeah, I could just trash you. I look at you later. While we run it, update with what we learned so far. All right, so I think this may like closer to the little Goldilocks zone. What we did is we brought the bid ask spread back to baseline, and then I'm keeping the percentage threshold where it's at right now because I think that'll enable us to be able to say, okay, you know what, we're going to see the activity, but we're also going to see the results on top of that. So let's see. This is kind of wishy-washy, y'all. This is kind of wishy-washy, y'all. Oh, go ahead and update the journal. This is kind of wishy-washy, y'all. For me and my house, it's still giving back too much money. I mean, yeah, that was this little rally here, but this is kind of deceiving if you're really looking at the numbers for the first couple of months, right? The first couple of months, it was struggling, but like it's catching its back half of the rally. What I want to figure out is why do winners win and why do losers lose? Is that something I need to check on next, or is it another parameter, right? Ready to run. Okay. It's in November right now. Is just shy under. So 1284.67. That's if you're looking for that number. I'm looking at win rate. I'm looking at max drawdown. I'm looking at profit factor. I'm looking at yeah, see. Horrible. 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 That's the same shit. review, and let's discuss. Yeah, I think these are gonna be rejected. Cause I ain't gonna hold you. This is ink. I mean, I'm not gonna hold you, man. From 1,000, from 100 to 1,200, it's not bad seamlessly, but like we can make this a little bit more better to have. Yeah, I agree. More selective, better call. Zero impact. So the real impact is the motherfucking this. Okay, that's the real impact. All right, let's test um 0.062 for VFG, and what do I also want to do? What else do I want to do? What else did I want to do? What else? What else? What else? I mean, everything else is kind of already almost optimized. You see me? That doesn't make sense to drop any lower. Let me see if I can increase that a bit. See if I can get more activity there. Um, let me see if I can increase. I'm kind of afraid to increase that. I'm not going to hold you. Okay. Yeah, that's the only thing I want to do. And keep everything else the same. Bow, bow, bow. V4. What is this? CVG 0.0055 2024. Let's move. You're awesome. Thank you. Update with what we learned so far. And I'm oh, never mind. I was going to vape for a little bit, but so as y'all can see here, I was running my paper test for the bots earlier today, and I mean I did have some great results. I'm not going to hold you, but there is a couple of things that I do need to like adjust accordingly, but maybe I'll do that once we're done with this work here. All right, let me talk. Stop talking. Back test is running. Uh-huh. And what this is, it's a little bit more aggressive than the point zero 0.08. It's point 0.00628. So I'm trying to see if that one, are we going to get a bit more activity there? I'm not going to hold you. I'm not going to force it. I think where we were at before is a bit more optimal. Because I want to see this live and see how it does live. I don't know. This is kind of, I don't know if I can trust these numbers yet. Reason being so is because we're still giving back too much money, fam. In my humble opinion, we're still giving back too much money. See, we just have 5 straight losses. We went to 1,000, but we gave back almost $500. That max drawdown is gonna be high. Yeah, no, this one is giving back way too much money. This is rejected. Yeah, this one is rejected. This is deceiving because you'll look. Watch if you let it end at 1200. I don't think it's going to, but it's low key deceiving though, man. Because like if you really been watching the numbers, like we giving back too much money. Win rate. I mean, sliding. I'm going to reject this. I'm going to reject this one. Yeah. All right. We're going to reject this one. Let's go back to baseline and get ready to test on 2023. Just so it can have some reference. Just so it can have some reference. This right here was horrible. Yes. Yes. Go back to 3.1 baseline. So we can test on 23 before making any other changes. All right, now let's file this away. V5. What was this? 0.00062. Move to 2024. Beautiful. You're awesome. You're awesome. Beautiful. All right, so I'm waiting for the back test to load. Rejected V4. This is technically 2023 version 1. So let's see how well it performs on 2023's data. First time we're running this back test on 2023. Wow, that one's loading. All right, let's see what you do. Update with what we learned so far. Looks like it's a bit of a little struggle bus, y'all. I'm thinking, um, I'm not gonna hold you. Hold on. QQQ. I'm thinking confirm. We need to volume. Don't want to add that. See, that's what I'm saying, bro. Like right now, it's at $93. I don't know. This is a bit difficult for me to agree with. Yeah, it's giving back way too much money, man. We're giving back way too much money. I mean, these little late year rallies are good and all, but we're gonna do better. All right, so I'm gonna do one or two more back tests with y'all. Then I'll find a good stopping point. And then we'll probably pick up this work tomorrow when we're paper testing. So we can have something to do. Review the following results and let's discuss. Shit got worse. It got worse. And I'm interested to find out por qué. Who has, matter of fact, we'll find out right now. Is it you? It is second chance with this. Okay. It's either catastrophic results, call performance destroyed, losing money, massive drawdown, versus 23, exit distribution, highest exit, more trades, worse quality, 50% more than 2024, but worse quality. Different volatility regime than 24. The fair value gap signal is less reliable in 23. Call setups are significantly worse. More false breakout strategies not robust. We need to continue to optimize. Let's find out why the winners are winning and losers are losing. Y'all, I'm not gonna hold you. This may need to be this may be a strategy that we're just gonna scrap and just start over. I'm not gonna hold you. Sometimes that happens. Review all of the CSV files and advise findings. Is this strategy worth saving? Is it worth saving? While that's doing that, and this is another one of our strats that had okay. I hope you finished. Again, this may be just a lesson right here, and if it's a lesson, it's okay, you know, because what I'll do is I'm going to take this lesson and we're going to come back twice as hard, right, to be able to make sure that we can learn from this. But if this is a lesson, I'm going to pause the video here. We're going to come back tomorrow and we're going to hit this thing even harder, right? I'm paused, but we're really going to be able to get this work in. I mean, because there's some strategies that are not going to work out, right? I'm not going to hold you, but there's going to be other strategies that's going to pop off and fly. So this is going to be a lesson. I see this being framed up as a lesson. I'm not going to hold y'all. I see this being framed up as a lesson. If this is a lesson, I'm going to take the L. And being able to learn from it. Not every strategy is going to hit, y'all. Not every strategy is going to hit. But I'm going to find a fucking gap fill strategy. I'm not going to abandon this approach. The fair value based strategy does not have a robust edge. Poor value, okay. Profitable, crashed, recovered, crashed again. Only 5 months were profitable. Baseline, still over trading, but completely failed. Market regime dependency, call setup collapse, overfitting evidence, exit logic failure, risk reward is broken. No strategy. No, the strategy is not worth saving. Critical issue. No edge across the market regime. Worked in 24 but failed in 23. Overfitted. Negative expectancy. Call logic fundamentally flawed. The poor risk reward ratio. What needs to change? The complete redesign. The SVG detection is unreliable. Better exit and risk management overhaul. All right, so this is where I'm going to pick up tomorrow for this video, right? And allow us to be able to learn what we felt from today and how we can learn from it tomorrow. Again, not everything is going to hit, right? And that's one thing that I want to show you all. Just because the strategy doesn't work out doesn't mean you abandon the overall theme of it. You abandon the strategy and just go to another one. So we're going to abandon this one and go to another one, and being able to continue to work this out. So as you can see here, this strategy has no particular edge. So I'm not going to keep y'all here. What we're going to do is just let this be our stopping point, and then we're going to come back tomorrow. Tomorrow, what I have for you all, we're going to be paper trading. So be on the lookout for that. And we're also going to be going and finishing up or finding a gap fill strategy that actually works. So I'm going to do some research tonight. If you do have any questions in the interim, please let me know. It is your boy Creative.